Joining us this morning exclusively is Southwest Airlines Chairman and CEO, Gary Kelly. Gary, it's great to have you back. Good morning to you.
Great to be with you.
You do say we will continue to experience year-on-year unit cost inflation in 19 ex-fuel and oil of at least 3%. So how hard is this? Is this treadmill getting faster, and can you keep up?
Well, I guess that's an interesting way to ask it. First of all, I'm very happy with where we are. This is a great third quarter. We're going to finish the year strong here in the fourth quarter and very well positioned for the future. We've made a lot of investments for the future, looking forward to serving Hawaii next year, and just a lot of exciting things on tap. This year, it looks like our unit cost, excluding fuel, is going to come in roughly flat to maybe up 1%. We've seen some inflation creeping in here in the latter part of the year, and our early read for next year is that that will continue. So we'll be busy over the next quarter spooling up efforts to drive some efficiencies throughout the organization. You know, one thing that's been happening over the past decade is we've been investing. We've been investing in airports. We've got new airplanes in terms of technology that we're deploying, and we're just not seeing the efficiencies in our operation that we really need to see. So that'll be a major focus, and it'll be our top priority for 2019 for sure.
Really, what's holding it back? And does any of this have ramifications for capacity growth in the year ahead?
Well, we've made a lot of investments, and we need to grow into those investments. If anything, it would argue that we would want to add more capacity to absorb a lot of overhead, if you will. So we've invested in airports, we've invested in technology, and that's all for the future and all for growth. So no, it won't impact our plans negatively in that sense. I mean, the other thing to make sure that that's clear for you all and everyone is that our business outlook is superb. We're looking at strong earnings in the fourth quarter. We're looking at very solid margins for 2019 at this juncture. We've got a magnificent fuel hedge in place. Even though fuel prices are up, we'll have tremendous protection. So the cash flow is strong. We'll continue rewarding our shareholders, and we'll make cost control our #1 priority. It's time to do that.
Okay, Gary, Jim Cramer, I think the people at home are going to be saying, well, wait a second. All sounds good, so therefore the stock should be up 4 points, not down. And what I'm looking at is this was really quite a strong quarter for your peers. United, Delta, American all had much stronger revenue per seat mile than you. That is highly unusual. You are a better airline than them. What are you going to do to reassert your premier leadership as the best company when it comes to that metric?
Well, Jim, you're right. And of course, I've been at Southwest a long time and have long believed that Southwest is the best. But the margins are, again, industry leading. The returns are industry leading. So that continues. The revenue growth, I'm satisfied with. We're up 1.2% this quarter, and we'll be up 1 to 2% in the fourth quarter. And looking for stronger growth in 2019 as a lot of our revenue initiatives come online. A lot of that, Jim, has to do with comps. We don't have a lot of easy comps, and a lot of our competitors do. It's Southwest, as you point out, has performed very well over a long period of time, and that's continuing and will continue.
You are not a man who is made of excuses. I know you always come on whether it's good or bad. So I'll let you do this. You had 2,200 flight cancellations in the quarter, and I'd like to know what that really is. You had thunderstorms, weather-related disruptions. It did hurt numbers. How did 2,200 flight cancellations actually hurt your results? Because I want to find something here that is going to explain to people that this is an aberration and that down 7% might be a buying opportunity, not a selling opportunity.
Well, it's the hurricane season, if you will. So that all those flight cancellations are primarily attributable to Florence and Michael. Hey, Jim, it's a very strong quarter. It was a record quarter, and we're looking at another very strong quarter in the fourth quarter. And basically, my report is we're going to have another strong year next year. Early read on cost is I'm not satisfied with. At 3% plus unit cost growth. That's clearly an aberration, and we'll get to work on that and make sure we drive the efficiencies that we need to. I think, again, the thing to make sure that everyone understands is that in order to produce the kind of product and drive the revenue growth that we've seen, especially over the past 5 years, has taken an investment. And Sears is a great analogy where that's a tragic story of a brand that did not have proper nurturing and investment. And so now it's time for, we've made the investments, it's time for us to go harvest the benefits of those. And you're right, we're not making any excuses, but the results are good, you know, and the outlook is good. And if things don't go so well next year in the economy or with fuel prices, we're very well prepared and very well protected.
It's funny, you mentioned Sears obviously has become a poster child for lack of investment. Are you getting any sense, and I know it's still early days here on tariffs and trade, but is there any sense that companies' plans for CapEx and R&D and investment are getting a second look, and not in a good way, because we don't know what 19 is going to bring?
Well, you know, we're all following the news, and I think as the investment community likes to say, there's always a wall of worry to climb. Everything that we see looks really good. Obviously, our view into the future is very short, but the bookings are strong, the trends have been strong, and I think we're set up very well for next year. So, short answer is no, we're not seeing any indications of that, but it's hard to see around corners, and we just always try to be prepared. We have very low debt. In fact, we haven't, all the investments I was talking about, we haven't borrowed $1 to fund those investments. All that's been funded with company cash flows. We have refinanced debt, but even that has been coming down. We have lots of cash. We have a great fuel hedge. So if things do go along the ways that you're describing, we're prepared for that. Not predicting it, but we'll certainly be prepared for it.
Straight talk, Gary. I appreciate it very much.
Always.
As always, we'll see you soon. Gary Kelly,
Yeah, you bet.
Southwest
Thanks for
Airlines.
having us.